Hi, everybody. Welcome back to VCTV. Today is Tuesday, and we have a double episode. We talked previously a little bit about 3D printing and 3D technologies and where that world is and shifting as we're looking at everything that can now be 3D printed. But there's important technology that plays a role in 3D technologies and 3D printing, and that's blockchain. Where? Well, we talked a little bit about it last show. We're going to talk maybe a little bit more about it this show, but we're going to dive into these topics, fintech and blockchain. They are my favorite, as we talked a little bit about last week. There's so much happening. We're going to talk about it again here today. And we've brought even more investors from around the world to share their thoughts and insights of what they're seeing happening in fintech and blockchain, and maybe a little bit of digital currencies all around the world, both from their perspective, locally, geographically, from an industry side to an investment side. We're going to get into all of it. And as I do on these shows, I want to run through a few big headlines because so much is happening in this space, and it's good to prep you and give you context as to why we do these shows so frequently here on VCTV. If you're not sure of what's happening, USPS, United States Postal Service, just filed a very big important patent around secure voting for in-mail, leveraging the blockchain. JP Morgan, Consensus are now in deep conversations of what's going to happen on the future of Quorum, JP Morgan's private blockchain. Stay tuned for more on that. We have an explosion of NTFs, non-fungible tokens, everything from personal tokens to digital art. Check out what happened with Paris Hilton this weekend and some of the art that she put together and sold. We're seeing new emergence in the gaming space around William Shatner, Dr. Seuss, and BBC's Doctor Who coming into the cryptoverse. We've got Amex, who's looking at purchasing Cabbage, a SoftBank-backed fintech company. We've got Samsung that decided, why not? It's 2020. Let's jump into the payments game, and decided to release a payments card in the UK to go head-to-head with Apple. We'll see how that plays out. Facebook doubling down on fintech, opening up a new division called Facebook Financial. We've got Pantera launching a $165 million fund, according to recent SEC filings, way more than what we anticipated. China has started to expand their digital currency and also their digital yuan project, not just throughout the country, but into Hong Kong and the greater Bay Area. These are just a few of the headlines as this industry is shifting, shaping, and changing every 2.5 seconds. We saw yamming or yams last week. Who knows what we're going to see this week? Maybe another fruit, maybe another vegetable. Who knows? Doesn't matter. We're diving in from everything from decentralized finance to decentralized applications and more as we go into this topic. So if you're not ready, get ready. This is a favorite subject of mine again, and to all of our panelists. So without further ado, a big thank you to your audience for joining. If you like what you're hearing today, click subscribe, give us a thumbs up. Investors, feel free to reach out to Elena, to the LA Token, or to myself. We would love to have you on a show like today or others to share your thoughts and insights of what you're seeing and investing in. Entrepreneurs, as I've said before, this is not just a virtual stage for investors. This is also a stage for you. If you'd like the chance to come and pitch us investors one-on-one, we'd love to have you. Reach out to the team and myself, and we would be more than happy to find the right show and investor sets for you. All right. Big shout out as well, last but not least, to Elena and to the entire LA Token team for making VCTV possible on your screen, on your device, anywhere in the world. Now, let's get to our investors and introductions. It's been a minute, but we're very, very excited to welcome back an old friend and guest of this particular topic on VCTV, Daniel. Welcome back to the show. A little intro, a little background on yourself. Oh, we can't hear you. Might be a mic issue there. Oh, no stress. You go ahead and do that, but I'll let Justin jump in first. Justin, welcome back to the show. It's been a handful of days. I feel like we spent the whole week and weekend together, but nonetheless, we've been socially distanced with Zoom on our new virtual stage, but welcome back.
Yeah.
A little intro, a little
Thank you. Thank you very much. And yeah, it reminded me of the whole, like Mr. Bezos, you're on mute from those those Senate hearings, which was the best, like just absolute best. Anyway, so my name is Justin Litchfield. I've been working in the fintech and blockchain space, I guess most of my career. I started by getting a PhD in chemistry and went immediately into fintech. And then in 2013, moved that actually into the blockchain space, and mostly been working ever since then on the edge of kind of the regulated markets and the blockchain. So right there, when you think about, kind of permissioned blockchain innovation versus permissionless blockchain innovation, and we can talk about that a little bit more. I've been trying to work right there at that interface, which has been really cool. So I've been working on an exchange. I started a bank. I've done a lot of payment processing for companies like some of the ICOs in 2017, which was really fun. And now I'm into the back into the real securities world and working on a securities exchange where we're going to be using some blockchain technology to make all kinds of investment more effective, so that people can actually get access to cooler companies. So excited to talk about all those subjects today.
I love it. And, the world of exchanges is actually very interesting in the blockchain landscape, because there's so many different types of exchanges. And so very, very interested to dive into that with you. Daniel, do we have you back? Test 1, 2, 3.
I hope so. Can you hear me?
All right.
Okay,
Yeah,
come back to reality here. Super. Thank you. Yes, Daniel, happy. Kyle, Elena, thank you for having me again. I mean, I come from the traditional finance, and we jump into the non-traditional asset class. We manage a fund of funds. So we see many things into the space from trading. The exchanges is very important. We see a lot of movement that, here in Switzerland, in Gibraltar, in Europe. And okay, we take a traditional approach to a non-traditional new asset class or new project, centralized from non-centralized. So happy to be here. Thank you, Kyle.
And we're happy to have you back as well. Next up, first time guest here with us, Elena and I on VCTV. Ivlo. I'm trying. So Ivlo, welcome back to the show. If you can, a little intro, a little background.
Sure. I'm based in London. My background is I've been an entrepreneur pretty much all my life. I've lived in London for about 20 years, started a number of different companies, some more successful than others. And I've been involved with crypto and blockchain since sort of the early days of Bitcoin, mostly mining and just messing around with it. Started taking it seriously as an interesting investment proposition when Ethereum came out. At the moment, I am at a fund called 7% Ventures. We're an early stage fund. We're not specific to blockchain or crypto. We're a generalist fund. We invest in deep tech, transformative tech, all sorts of things like that. But my main interest personally is blockchain. Invested across a number of different projects. One of them is a regulated exchange for securities called Archax. Invested across a number of different funds, a fund called Wintermute, which recently raised a Series A from Lightspeed Ventures. I've been working with them for quite some time, and a bunch of other projects. Generally quite excited about the space, super excited about the DeFi space at the moment, just purely comparing it to the regular finances. It's a no-brainer. So yeah, quite excited about what's happening in the world at the moment.
Look, all truth, if you're bored, just pay attention to decentralized finance. Just get on Twitter and watch this. There's so much happening in this space. There's not a boring day. It's just crazy how much activity is happening, and some really setting a very exciting stage for the next decade ahead. So, I tease, but there's actually a lot happening in this space that's very exciting. I believe we just crossed, I want to say, the $6 billion mark in total locked value in that area last week on Friday. I think, Justin, we talked about. So, this is just the beginning of where that industry is going. So stay tuned. Jeremy, teeing you up. Welcome back to the show, my friend. Little intro, little background.
Thanks for having me, Kyle. Appreciate it. I'm with New Form Capital. We are a blockchain and fintech focused VC, early seed stage. 3 buckets that we're investing in are DeFi, digital securities, and infrastructure around the space. The thesis of the fund is really connecting traditional finance, traditional Wall Street to Fintech 2.0 or Fintech on blockchain rails. And a number of our LPs are traditional hedge fund managers and trying to bring more people into the space.
Well, love to hear it. We saw a little bit of that last week as the founder of Barstools, president, happened to jump into the crypto space, which threw everything for a loop. It was highly entertaining, but all jokes aside, what Jeremy, you and your team are doing is pretty exciting and also pretty foundational for the industry as well. So excited to dive into that. Kevin, welcome back to the show as well. A little intro, a little background.
So I'm certainly listening to Justin. I'm certainly older and with less experience than Justin, but coming at it from a very different angle. So I started in good old traditional finance.
Kevin, if we can have you lean in just a little bit to the mic, we're losing you just for a second there.
So yeah, I got involved in all things fintech for many years now. And my background, as I said at the beginning, in case you didn't catch it, was more traditional finance. I'm now CEO of a blockchain and fintech advisory firm. I'm a mentor, so a fintech mentor for the UK's largest entrepreneur accelerator. A lot of early
Kevin,
stage.
sorry, Kevin, I didn't mean to interrupt you there. You were cutting in and out on the audio. So while you're taking a look at that, just as to the audience, again, Kevin comes from the traditional finance background. You know what he's doing in general at Boom and Partners is pretty foundational, as well as I mentioned with Jeremy. But you definitely need to check out his book, number one, Growing with Blockchains. I've had the chance to read it myself. Very impressed and very excited at it. Now he is doing some investments and also advisory in the space. So at the early stage, and we'll come back to him a little bit more on that as well. So Kevin, I apologize. I just want to make sure the audience heard that. I know there were some audio issues there as well. But last but not least, Mark, welcome to the show as well. First time here on VCTV. If you can, a little intro and a little background on yourself for the audience.
Did I successfully unmute?
You did. You did a great job.
You always want to make sure you know where you stand.
There you go. You didn't break rule number one, so we're good.
Right. Good. Well, hi, everybody. My name's Mark Rodrigues. I've been in this business well over 30 years in financial technology, both as an operator and an investor. I ran the technology and operations consulting practice at Oliver Wyman. I did that out of London for a number of years. I ran global sales at Thomson Reuters. I was at Aqualine in the private equity end of things. And these days, I'm a general partner at Illuminate Financial, where I'm based in New York City, but I've got colleagues in the Valley, in London, and in Singapore. We do Series A investing, late seed Series A. I'd say that my colleagues' backgrounds are like mine. We've all been operators. We've gotten our hands dirty in either the data or the tech layers or usage or users. We've dealt with exchanges. And I'd say the thesis for us is we're driven very much by the business problem first and the technology second. So though we've done blockchain, and smart contracts, we don't wake up in the morning saying, let's do some blockchain. We're generally looking first for the unit economics on a distinct business problem that can scale and that can leverage. And then we try to apply our network of industry network and our understanding of how these things develop and go to market and then get supported after sales. And we try to add active sort of involvement in companies from there. We're on our second fund. Our first fund, we made 12 investments. We've had one exit out of that one. It's only vintage 2015. We had sold the business to Bloomberg. And we're just about halfway through the second fundraise. So fun to be here today. So thank you.
Wonderful. And Mark, just a quick question for you. I mean, this is fun too. Let's promote you for a second. Where you focus on the Series A, a little bit later stage. What type of average investment do you do? And is there any particular requirements aside from an industry that you're looking for?
Right. I think like all things, it progresses from fund one to fund two. As you know, I think in fund one, the check sizes we wrote some checks as low as 250,000 that were somewhat unusual and speculative, and we've written others as much as 3 or 4 million. We generally lead the rounds is our preference, and we're usually looking for board seats and observer seats when we do get involved. I'd say the criteria is not an uncomplicated one for those of you that do Series A. We're looking for evidence of revenue and some evidence of a product or a platform or a service that scales. So some evidence of commercial viability as opposed to more speculative. We have done a few things where one or two of those were missing, but they tend to be the exception, not the rule.
Wonderful. Well, thank you very much for sharing that with us. And again, everyone, welcome very much. So for the first half of the show, I want to dive into what's happening in this space and get each of your thoughts and opinions. We've got 10,000 different questions we can ask, as there's 10,000 different things happening right now in this exact moment in this industry. But I would love to hear from each of you, as I know, again, you each have different perspectives, focuses in this area. We know Mark does not wake up thinking about let's talk smart contracts, but nonetheless, I know he is looking at a lot in this space on all levels. So Daniel, let's start with you. What are you seeing as kind of the current state globally, whether that's in Switzerland, whether that's in Europe, or just in general from a fintech and a blockchain perspective? What are you seeing as the current state of things?
I like very much what Mark says, because we also come from the traditional space. We incorporated a block and crypto fund, but we don't wake up necessarily only looking into the blockchain space. So we look into the economics, and this is very important for our clients because we have to provide returns and sound investments, because most of our clients come from the traditional space and maybe don't have this enthusiast about the ecosystem. So what we have been looking for quite some time is the legal framework, because of course, being a fund, we have to see the regulated space, how the legal framework is coming, and we see very important fronts here in Switzerland. I'm based in Zurich, and just the parliament passed voting on blockchain and the crypto space, and it was majority, all votes in favor, 0 against. So this is a very good and important sign that the government is trying to make. They provide few licensings in the crypto space. We have 2 banks that are fully regulated by the regulator on the blockchain and crypto space. One of the investments, Bitcoin Swiss is a big exchange here in Switzerland. Is very backed by Ethereum community, and the community, they just raised their Series A with impressive numbers. So we look into first the legal space and how we don't step into any toes, because we want to be conservative. But again, going back to D5, we see now the momentum, and we also like to see the token economics and the numbers that we can relate to the traditional space. Again, we invest into funds. One of the funds that we invest, of course, they do venture capital. At least 30% of our allocation is into private equity and venture. So we take a lot of careful look into the funds we invest and what they do. And interesting enough, we are seeing, like Mark says, a few projects that are coming back, and funds in the venture space that they are having exceptional returns because these projects materialize, and we like to see, and projects that we see that are coming and materialize is everything is related to DeFi, of course, exchanges, infrastructure, token economics, Oracle situations. So more into real use cases. Sometimes in the past we saw wild things like the central lands and tokens in gaming and those things that are very interesting, but real projects that they bring real economics. So exchanges, legislation, real numbers. So also very interesting. the space has more volume, so our traders are also bringing good value, and that's what we also have a big bucket into trading strategies. We of course back, and the futures sometimes are very much criticized in the space, but they are very important for the finance industry in order to hedge and in order to qualify the space, because Big Brother is watching. And if we want big money to come, of course, we cross 6 billions and those things in DeFi. This is good numbers. But when a bank has 40 billions assets under management, 6 billions is sometimes nothing. So these are the guys that we try to allocate business. So we try to put it in their terms, legal framework, stability, real numbers, how the space is developed. But yes, DeFi, exchanges, also an exchange we invested is in Gibraltar, Tap Global also, with some industries we see these that are very interesting.
Yeah, there's a lot happening. I mean, a lot of this is also early innings, as we've mentioned many times on VCTV, is we're gearing up to something much more, right? This is a lot happening in a very short period and a lot being tested, and showing its areas of strength and areas of weakness. And those weaknesses are quickly being diminished and improved upon as well, which is exciting. But you mentioned crypto banks, and we're seeing more financial institutions starting to move into backing, not just those that are building in this space, but also digital currencies and custody solutions, and the actual credit cards or debit cards. We're seeing more on the transaction side as what's called the crypto card wars, or battle, whatever you want to refer to it as, is starting to heat up as each of the major processing companies are starting to get into the space as well. So a lot happening, as you mentioned, from the Switzerland side, but just in general, there's a lot happening in that space as well. Justin, coming to you, what are you seeing as kind of the current state of these activities in general around fintech and blockchain?
Yeah, I see. I track really 3 different big avenues of this. One is the crypto exchanges. That is still kind of the only viable business model. We're 10 years in, and the only real revenue producing business model is crypto exchanges. And it's cool, but it's a pretty known business right now. And it seems like most of those are just innovating by giving customers more risk, like letting people take bigger risks, which is terrifying on a bunch of fronts. The second thing is a lot of the innovative things like the DeFi, which is cool, but I think I've been a little bit unimpressed. I love the enthusiasm, but the kind of variety of the products, I think, is still kind of leaves a lot to be desired. I'd love to see more variety, more products, more different types of things, because even then it still feels a lot more like this is a way to make really high margin, or I guess low margin, like basically making big bets, like just leveraging up real big to make a short bet, and that's like cooler and cooler. But I feel like it's close to something that could be there. And then the third part is it's kind of the most boring, but will probably be the most impactful, which is the big banks adopting crypto rails. Like watching the big institutions come onto crypto rails, so boring to watch that. But when trillions of dollars starts moving around on it, a basis point more efficiently, that's real money that can be returned back from capital reserves, back to productive investment, a lot of stuff like that. So that's moving, and it's not hype to talk about, but there's so much growth happening there. It's just not that cool to see Fidelity doing something neat, because we don't want to think about Fidelity as a pump up a new crypto company, but they're coming.
They are, and they're one of a few. But I mean, some of the reports they're putting out show a very good highlight. Even now, Goldman Sachs getting into the game a little deeper as well. These big institutionals, to Daniel's point as well, it's a big industry shift that we've been waiting to see, and it's now here. And Jeremy, I'm going to jump out of order to come to you, because I think that's a perfect tee up from Justin. Is kind of what are you seeing in this space? Coming from the traditional side of finance, and kind of bridging these two worlds of traditional to digital in these industries.
Absolutely, and it's certainly exciting that big banks and financial institutions are getting involved. There's just several hurdles that the industry as a whole needs to cross before real adoption happens. One of them being speed. Transaction speeds on blockchains are just nowhere near capable of handling the volume that is in the traditional market. And a few other things, but DeFi is really exciting. It's just I think when it gets to a point, compliance might be an issue as things scale up. Financial markets were built over years and years. You can't just cut out a lot of certain processes that are in place. It eventually might happen, but that's going to further regulation needs to develop for certain markets to really take off. But generally speaking, transaction fees within crypto and traditional markets are coming down. Visa, MasterCard, WorldPay, they all recognize at this point it's a volume play. They've been very active in M&A over the past 8-10 years. And that's just going to continue to occur. I really see 3 or 4 big holding companies, and as soon as fintechs start to gain volume, they'll just purchase. I really believe that's where the market macro is headed.
I mean, you're spot on. We've seen Visa make some masterful plays in this world. Some very secretive, some very public, as they've kind of alluded to in job descriptions, to teasing out little bits and pieces here. Now their acceleration program or their business acceleration program, as I mentioned, Amex now is looking to buy Cabbage, throwing them deep into the fintech space. You're spot on as to what you're seeing, Jeremy. Vilo, I want to come to you next. What are you seeing happening in these spaces? And then Kevin and Mark, I'll be coming to you afterwards. Vilo, what are you seeing in these spaces and kind of what's happening currently?
So a couple of interesting things that I'm looking at. On the one hand, I've never seen a better example in my life. I mean, DeFi is still a little bit like a toy, right? I mean, we're talking about 6 billion, but actually, it's nothing in the grand scheme of things. However, recently I've got a flat which I've tried to remortgage because I wanted to just release some liquidity out of the flat, and that process has taken 8 weeks. I mean, 8 weeks to get a collateralized loan out of a bank for a flat, right, in London. I mean, and just as a comparison, you go to Compound and you lock up a bunch of Ethereum and you walk away 5 minutes later with as much USD as you want, provided your collateral covers. I mean, there's just no better example that this is the way things should work. Like literally, there's just no reason for me to talk for 8 weeks to like a mortgage advisor, the lender's legal representation, and all of that. It really kind of shows that things just need to move down that way. It is still a bit of a toy. I really like what's happening with the with the governance tokens and the whole decentralization, and how companies are moving to kind of DAOs and kind of new structures that make them a lot more compatible with being able to share their revenues easily and all of that. And I think regulation needs to come in. I think regulators are still catching up, and they haven't even caught up with the technology yet, never mind even figuring out how they're going to regulate this and KYC and stuff. So we're going to see a bit of a battle, in my opinion. But it's quite an interesting movement. The incentives that are happening right now to incentivize participation, it remains to be seen. Obviously, once the incentives dry out, whether the participation will remain. Is this going to start the process, and then as the incentives disappear, it's the same with Bitcoin. Obviously, you had big block rewards in the beginning, and they've dried out, but miners haven't stopped mining. And the interesting thing is to see how that actually affects DeFi going forward. And then on a personal level, I'm invested in across a whole bunch of quant funds that work in the space, mostly market neutral funds, market making and arbitrage and stuff like that. I mean, and especially in the funds that cross the line between DeFi and CeFi. I mean, the returns are insane. And again, it's because the space is so nascent and there's so much structural opportunities. But like, I you know, it would be impossible to see that in the the kind of the legacy financial system. So right now, it's quite exciting to sort of see these opportunities being exploited and them driving sort of, you know, double-digit percentage returns per month, which, you know, you wouldn't see anywhere else with sort of minimal drawdowns. Yeah, I guess that's it.
I mean, I know that's not it. I know there's so much more, but I'll let you pause right there. We'll come back to it. So Kevin and then Mark, same question. What are you seeing as kind of the current state?
Yeah, from my point of view, that the current state has changed. So not looking at the big investments and the big questions that you've been covering so far, but I was mentioning earlier, the parts that you didn't hear, that I am also involved with early stage businesses and fintech businesses, and looking at how blockchain in particular, but all fintech type activities can be used to develop those businesses. And what I found's changed is that people have now really got it, that it isn't a silver bullet. It's not something that's going to solve everything. And they're, instead of starting with a solution that they're looking for a problem to solve, they're now actually looking for a problem and then seeing whether blockchain is indeed the right answer. So that's changed. And during the whole coronavirus issues, I've seen more businesses looking at pivoting their entire business one way or another. And that also has led to, I think, more blockchain related solutions coming involved. And you mentioned the book earlier, but the book, for the record, has had contributions from all sorts of people like Dell and IBM and Digital Catapult and sixth largest law firm in the world, and all these different people looking at it from those angles. And again, what is clear is it's all moving very, very rapidly. And that's everything from tokenization of assets and through to gamification in loyalty reward programs and all these different ways. And it is just moving, as you and the other speakers have said, very, very rapidly. And that opens up so many opportunities for business to do that. And because so often it's these smaller companies that are able to do that and move quickly, that then gets them up the scale very quickly. And that's where they start to get noticed by the bigger players. And it's the bigger players with the money that would actually rather a small business take it, iron out all the risks, and then just chuck money at it and buy it later. So I think there's big opportunities for small companies to grow rapidly and then get taken out. And there's also big opportunities for those bigger players, as you've mentioned just earlier, Visa and Amex and all of those, for them to actually then go on a little buying spree, because actually it's much quicker for them to go down that route rather than to trying to develop something internally. And I know big companies that are doing both, that are both trying to develop something internally and actually buying up small companies, because, as I say, it's actually quicker to go and buy those small external companies.
I mean, we're seeing heads shaking left and right. I mean, now everyone is agreeing with you on that. I think there's no argument there. Is we know a lot of this technology, whether it's on the traditional fintech side or it's blockchain side. And Jeremy, I'm coming to you in just a second before we get to Mark's comments. But I mean, these are infrastructural builds. They are not cheap and they are not fast. You know, to integrate those at the enterprise level and then bring them out to consumers, there's many pieces to that puzzle. It is not a very quick game. And you're right. Letting a younger company or a new company or a smaller business take that opportunity on and then scoop them up. There's plenty happening in that space. Jeremy, anything to add on that?
Yeah, I just wanted to add, I think, you know, it's certainly, I agree that, banks and financial institutions will go the buy rather than build route. But one of the main reasons that's happening too is blockchain developers hate dealing with corporate politics. Every single bank.
Just interrupt real quick. Just real quick. All entrepreneurs dislike
especially
dealing
blockchain
with corporate
entrepreneurs.
politics. Just to add that, but go ahead.
No matter how much you pay them, and you can see it here in Boston, State Street, Fidelity, Goldman, JP Morgan, New York. They'll hire great talent. They'll be there for a year or two, get fed up and be like, screw this, I'm going to go work at a startup. I don't want to have to deal, explaining to every single partner what I'm doing and why. It's, the amount of turnover in big banks with blockchain developers is massive. And it's, universal across big corporates.
Absolutely agree. And I this is, again, a perfect tee-up. It's like you guys all talked pre-show and told exactly a script of how you were going to tee each other up on this panel, because Mark, I think this is perfect to come to you. You've been in this space for 30 years. Maybe a little bit longer, maybe a little bit shorter.
Yeah, no, definitely longer. I mean, look, it's a very good point that Jeremy makes about talent. And there's always been a cutting edge technology through the years, and there was scarcity of people that really knew things, right? Whether that was Python or whether that was, the early days of cloud technology and migration to cloud. What's happening, I think, right now is that financial institutions are, 80–90% of their budget is spent on just running the financial institutions. It's maintaining a legacy system. So the people aren't incented or hired really to innovate. In fact, they're boundaried and held within grounds. And then the vendors or the incumbents, the top 40 or 50 biggest vendors and providers of technology are all themselves over 50 years old. So they're just as calcified and just as locked into a stack as the financial institutions and the practitioners that they serve. And so what do we have? We've got some enabling technology like distributed ledger and blockchain, which allows us to codify in a unique way, not just data and standards, but business processes, rules, validations, and things like that. It's the reason why, UBS some years ago said that for every dollar they spend on market data, they spend 4 times that administrating it, billing it, tracing it down, following it up, integrating it, cleaning it, the whole thing. So the entrepreneur needs to make a decision. Do I come at this market with a generic tool and allow the incumbents or the people that are there already to figure out how to do their own dictation and capture this understanding of process and data and people and rules themselves? Or do I shrink wrap and predict a specific problem and sell a solution, a spot solution, which typically these days is around securities, post-trade settlement, and things like that, are a good example of something that lends itself to a pre-wrapped, or if you will, or a solutions-based or use case that's very specific. I think the answer is both. I mean, I think there's a market for selling generic capabilities involving spot technology and some other things from Amazon, just as there are with some specific things around commodities or cash equities or things like that. And as an entrepreneur, you need to make a decision, because you could spend a lot of time and money educating the market, which makes you a very nice humanitarian, but you'll go broke, right? They'll never write a check. You've got to figure out what will attract the money and what will pragmatically allow them to begin writing checks. And I think in the world of blockchain, I think the best is yet to come. I think it's still another 3 to 5 more years to play out before solution sets begin to get more and more plentiful, and the entrepreneur can feed themselves and the investors can feed. I think there's still some debate, unfortunately, in terms of how people procure this stuff. It's still, in my opinion, although we've got a number of investments using these technologies, it's still for many early days.
Yeah, and I think you bring up a good point. It's early days, not just for the it looks like we have a special guest over there, Justin. It's not just early days for the enterprise, but also for consumers. I mean, some of these technologies and some of these applications it's being applied to are still very new to us. And we're sitting here on the forefront of technology. Imagine those who may not be. I mean, this stuff is very, very early days. Even contactless payments, we've referenced it on this show before around this topic. The idea that here in the US, we're still using checks until maybe or not recently. You know, Apple Pay was just starting to be, I think it was about 5% of contactless payment markets by 2025. The idea that, you know, credit cards still have chips in them, we go on for days. A lot of this stuff is still very new for most. And in terms of mass adoption, you're right. I mean, we're 3 to 5 years out easily as well. So I absolutely agree. And guys, I want to pause for just a moment. We've reached the second half of the show. We have a very exciting project that has joined us today that would like the chance to pitch each and every one of us here as investors and to our live audience. So we'll give them about 5 minutes. So Marco, if you want to go ahead and queue up your screen, Marco and his company will have 5 minutes to pitch us, a hard 5 minutes, and then we'll cut them off. And during that time, they'll go through their pitch to us of what they're building. And afterwards, we'll come back for some quick feedback to Marco and his team and any interest or follow-up that we may want to have. After that, we'll get to the second half of the show where I want to dive a little bit more into what's missing. Where are the opportunities in this, not just for us as investors, but also for the entrepreneurs that are building. And we'll get to the lightning round as well with some fun questions. So Marco, are you ready?
Yeah.
All right, so you've got 5 minutes on the clock as soon as you start, and we'll go from there. The floor is yours.
Thank you so much for everyone to, I cannot have the share screen. Okay, now it's okay. Here we are. Do you see the screen sharing?
Yes, we do.
Okay.
So you're all good to go. 5 minutes on the clock.
Okay. Well, welcome to the CFX Quantum presentation. I will go through very fast. What are we born for? To bring high-level finance to everyone. We made this for 30 years and we're still doing it, and we want to exploit the new technology to do this. What are the major problems that have investors now? Missing financial investment know-how, ignorance, lack of proper investment tools, and they are confused. What is our solution? We have three main solutions that we'll want to take. Adopting our wallet. We have a wallet exchange where people can share tokens with others and also purchase with fiat money or with other tokens. Earn money, how? With 0-1, our disruptive innovation. 0% risk and 1% a month return with arbitrage technology due to a quantum chip from Fujitsu. Then people will share their results with other people using the word of mouth. That is made in collaboration with ATS Sharing Referral System, a company that was able to take sharing issues to 5 million people. We say, why now? We have the futures now. The future is coming to real world, even the most advanced technologies. The market is made mainly by millennials. They will grow 5 times up to 2030, and they will be the majority of people in the world buying new products into investment. We have estimated a total 1.5 billion people, an available market of 300 million people, sorry. And we plan to get in 5 years, 50%, like 15 million people. We set the bar high. We have about the competition. The competition is getting mobile, crypto-friendly, earn for interaction, and we got a plus, earning at zero risk that will be available to our customer. Let's go through very fast with the digital annealer. Is a technology that allows to squeeze a week of calculation into few minutes. I cannot go through now, it's too long. Our adoption circle of the product. We will stimulate onboarding on the wallet, then they will exchange and trade cryptos with a mobile application, then we'll discover 0-1 product to earn 1% amount with zero market risk, interact with us with the sentiment index participation and get rewards, and so they will refer back to friends and get other wallet onboarding. The software development is up to September will be the beta version. Then in October will be the release 1.0 with 0-1 included. And then next year we'll launch the Surf Fund, that is our dream, a fund for also giving to poor people in the world. The management is up to now made by 8 people plus 8 traders with advisors, and the collaboration with Smart Exchange to exploit the digital annealer technology of Fujitsu. What is the main business model? Outperformance fees. Outperformance fees means that the first 1% of return of the product every month will go to customers, net of any cost. And CFX Quantum will get the extra performance on that. We plan that will be around 0.5%. The exchange fees will be there, obviously, but will be used mainly for maintenance, to maintain the global service that we give to customers.
Okay, Marco, I apologize. Marco, hey, apologies. That's just gave you just a few extra minutes there, but we're over time. So
yeah, just 1 minute. I'm
Marco,
finished.
hold on, Marco. Sorry, we gotta stop here, but I am gonna turn it over to the investors to make sure they get you feedback as well, and then we can have a little Q&A afterwards. So investors,
sure.
Again, thank you, Marco, for sharing.
For listening.
You're welcome. Yeah, thank you for sharing. And so investors, I want to come to you for some feedback to Marco and his team. Daniel and Jeremy, I want to come to you first, as you both have a little bit of experience, and then Mark and Kevin. So Daniel, any quick feedback or thoughts, comments, etc. from Marco and his team?
Actually, what are you trading? I didn't get it. You trade crypto assets or you trade traditional assets?
Crypto asset by now. We will switch to traditional later on.
And the other feedback that I see is,
for traditional we need some kind of different size and permissions.
Yeah, you need licensing and those things.
We are on the road for that. We take 1 year.
Yeah, and you take after 1%, you take 0.5 is 50% commission. So it's it's quite interesting.
No, it's 1/3.
Yeah,
it's 1/3 of the total.
1/3 of the total.
So Daniel, I want to make sure Jeremy and Kevin get a quick thought in, because we've reached the top of the hour. So I want to make sure we get a chance to close out here. Jeremy, Kevin, any quick feedback or thoughts for Marco? Again, apologies, Daniel.
Yeah, again, a very quick overview, of course, but I was a little unclear as to where it was registered, and that obviously has all sorts of issues in terms of, regulatory points. And what are you trading? You said you're trading, but trading between what?
It's registered in UK, and the trading will be arbitrage trading between the same instruments. So that's why we are talking about zero market risk. It's obvious that the risk zero is not possible at all, but we will take only triangular trades and so on in order to get very small percentages for every trade.
It's obviously a very crowded marketplace, and you need to be doing something different and explaining that difference and that proposition very well.
Yeah, the main difference is the exploiting the digital annealer technology that is, let's say, 1,000 times faster than the average big computer. So with that, we can exploit very fast time and very short time in calculation so that we can get before the others.
Got it. So Jeremy, real
simple,
quick,
you know.
Thank you, Marco. So Jeremy, any feedback or comments from Marco?
Yeah, I think what Kevin got at, really the differentiator. All the big high frequency funds in the world are looking at crypto and applying, algo-based trading. Just, what exactly it is that makes, your solution better than, I don't know, a financial institution that's, 10,000 employees and does this in traditional markets, and now they're gonna, do it to crypto.
Yeah, and I would agree on that. I would, Marco, hold on one second. I would add on to that, and also just another piece of feedback. You've got a lot to verbalize to investors when you do share with them. So try to make your slides a little less text heavy so that we can pay more attention to what you're saying and not reading. I saw a few investors having a little difficulty reading, and that's something we all have a common time with as we do build these pitch decks for all shapes and sizes. So with that, we have come to the time, unfortunately, Marco, but real quick, where can everyone find the company online? What is your web address?
So I was talked about 7 to 10 minutes, so 5 is quite small compared to what I have, but no problem at all. Just one word, final word. We go to retail customers, and we are not competing with hedge funds, to be clear with everyone, okay? And we are very strong on retail customers for several reasons. We have to explain better.
No stress, Marco. You did a great job. No stress. You did a great job. It takes a lot to get up virtually.
No problem
or physically.
at all.
It takes a lot to get up on stage and share what you've done, regardless whether it's virtual or physical. Where can everyone find you online? Where's the web address they can go to learn more about you and the company?
token.cfxquantum.com.
Wonderful. Thank you again, Marco.
I've put token.cfxquantum.com.
Thank you very much, Marco. We've got that in the chat.
And on LA token.
Thank you very much, Marco. We've got that in the chat, and we'll share it with the audience.
Thank you so much.
Well. You're welcome. So thank you again. And now, Jeremy, Kevin, Daniel, we have come to the lightning round. I apologize. We went a little bit over time today. There's so much great content that in the first half of the show, and Marco did a great job sharing his. I want to be conscious of everyone's time. So I want to come to each of you for closing thoughts as to what's happening and maybe any opportunities you're seeing in these industries. And then, of course, where everyone can find you online. So Marco, if you can go on mute. Kevin, let's start with you. Closing thoughts, opportunities, and of course, where can everyone find you online?
Yeah, as I was saying earlier, there's so many different opportunities that it's basically the young entrepreneurial businesses looking at the gaps in the market. So I'm seeing everything, almost everything imaginable. So I think there's nothing I'm going to point out specifically other than finding those gaps, listening to clients, and don't be afraid of trying to get something out there. Don't make it perfect before you go out to market because you don't know it's perfect until you get the feedback. And that's the thing that I find quite frustrating with a number of businesses in the tech space in general. So I guess that's my only immediate takeaway in such a quick comment.
No, it's great. Jeremy, to you, any closing comments, opportunity areas, and then again, where can everyone find you online?
Yeah, I can drop my email in the chat. There's, I think a resurgence of interest in blockchain and crypto, especially in the, macro landscape of every central bank, print to infinity and beyond. I really believe, I just hope that, this time around, there's going to be less noise and entrepreneurs, integrating blockchain as a money grab, which happened in 2017. But really, there's a lot of traditional business models that can be applied to this new asset class. Not anything wild. It's just taking things like insurance and traditional business models that just aren't built out yet. I think there's a lot of opportunity there.
Absolutely. And Daniel, closing thoughts and opportunities to you.
Thank you. Yes, I dropped my contacts in the chat. It's the webpage is blockassetmanagement.com. You can find there the information. And again, like everybody says, I'm coming from the traditional here in Switzerland. We have few incubators and people are taking a lot of investments, and even the traditional in the AML, KYC, ID identification, in those things that can help definitely the D5 to cross the bridge between the Wild West into what is investable. Because we see many projects, but these are not investable. So the KYC, the ID identification, the AML, these are investments that we see the banks around here and big players, they start looking into and they invest. So like Jeremy, traditional things that you can touch and feel, you don't have to go to the Wild West, and these bridges between traditional and the blockchain applications, we see, and some of the venture funds that we have, they already got big liquidity events on traditional spaces, very, very traditional, nothing so wild that is not invented. But thank you. I mean, and looking forward to these new ideas.
Awesome, wonderful. And to your audience, again, thank you for tuning in, and make sure you check out all of our investors, including Mark over at Illuminate Financial. We had Ivlo for 7% Ventures, pardon me, and also Justin at ABE Global. And make sure to check out Kevin's book, Growing with Blockchain. Shameless plug, but well worth it as well. And audience, again, a big thanks, and to you, our investors, thank you for staying with us and sharing your thoughts and insights today. Audience, if you like what you heard, click subscribe. Go down in that box, give us a thumbs up. Also, feel free to reach out. We'd love to hear from you and have the chance to have you on our show to share your thoughts and insights on what you're seeing in the industries. And also entrepreneurs, we'd love you to have the chance to come on our show, pitch us as investors and also the live audience. A big thank you to Elena and to the entire LA Token team for always bringing VCTV possible to you, to your screen, to your device, anywhere in the world. I'm Kyle Ellicott, your host. You can find me on all social media at Kyle Ellicott, and we'll be back here on VCTV tomorrow with another double episode day on VCTV. So with